Good morning, everybody. We are going to start our prep here for our OPEX day, our triple witching day, December 20th, 2024. Are you watching some of the risk metrics in the market to see how far we can go? Are you paying attention to volatility spikes as the market has leptokurtosic distributions, and those tails come in when that ball has been held underwater for too long? We can see this if we look at the VVIX. And whenever we've gotten these big spikes, we had Volmageddon, COVID, Silicon Valley Bank collapse, the yen carry unwind on August 5th, the pre-election drop, and now we are making our move up again. We are going to watch this closely coming in the coming weeks, as this is something we do with our students as well in depth to really pay attention to when this market could bottom. But as we went over yesterday, this, and we'll dive in today, is a controlled move down as we can see some of the breadcrumbs. So before we get started here today in depth, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. In yesterday's session, we balanced in that lower, that move down from Wednesday. And in our overnight, we've just continued that down move. And yesterday we had talked with our students live that 59.85 was our key level because we could see the offers sitting on the books. And that was going to be the key for if the market could get over that, we could make a move up. Otherwise, we wanted to stay short. We continued that move down right to the lower area where market makers were going to come in and defend in our overnight. From our positioning standpoint, longer term commercials are short. We'll get an updated report today, but it'll take next week's report to come in to see how they repositioned after the liquidation on Wednesday. Market makers are in risk absorbing mode, which for the time being will signal a wider move, higher volatility, bigger ranges. And our line in the sand is currently 150 points above us at 60.50. So that's where we're going to continue to monitor how that comes down. And once we reclaim that, then we can look for the upside move to continue. Fund managers on this move down on Wednesday did sell about 20% of their overall portfolios. So this gives us two things: accumulation by the commercial side of the market. Again, the house will always win, so they can continue to buy on the way down. And build their position before going back up. It takes time for this to play out. And then second, this will give us a buyer to distribute into as we had made that move up and they had been fully invested and couldn't buy anymore. Then we get the downside move. Our larger participant that we monitor is only on the books today with an offer. And we can see an $8 billion offer if we get up to 59.80 or an $8 billion offer if we get under 58.91. So those are going to be two areas we watch, as it is big resistance on the upside and big fuel on the downside. And so we know that we have three poor highs above us on that move at the all-time highs, and we really want to pay attention there when we do reclaim our line in the sand, because this tells us that auction has not been finished. From our flow standpoint today, we did go over our largest participant and market makers being in risk absorbing mode. The only other factor is we don't have any catalysts until January, so we won't be monitoring any of the insurance in the market. People are going to reposition their hedges for the year out. Today, we'll get JP Morgan repositioning their hedge for the quarter, and there will be a lot of money coming in today. So our three biggest levels we're going to pay attention to today are going to be this 58.70, 59.20, and then our upper rotational zone at this 59.90. The smaller areas we want to pay attention to will be 59.71 and 59.42. We are expecting price action to stay rotational if we can hold 58.88 up to that 59.90. And it's easier to see here on our 15-minute chart or time-based chart for our weekly. And if we get underneath here, this 58.88, we will look for our pivot at 58.55, and our lower ends, 58.30 is where we expect to see Chicago come in and defend it first. And 58.08 is where we expect the big guns to come out if we go down into the closing of OPEX. Again, we will continue to keep you abreast on where our line in the sand is, as that would change the market fundamentally and characteristically. Until we get there, we are going to look for those wider ranges, Be prepared for a little more downside, but in the grand scheme, this is not anything different than what we've seen in the past. Have a great day trading out there, guys. Stay safe, maintain your risk, and have a happy holiday season.